Good day, inderesTV viewers and listeners. Nordea published its first quarter results. Today I'm interviewing Nordea CFO Ian Smith here at Nordea headquarters Vallila, Helsinki. Ian, congratulations on an excellent start to the year. I think you're not well known among all Finnish retail investors, so maybe at the beginning you could tell me something about your background.
Well, good to see you, Valerie, and hello everyone. So I joined Nordea about 2.5 years ago, so that makes me very much a new guy in the team. I'm a Scot by heritage, if not by accent. And Scotland is famous for lakes and mountains and beautiful beaches, so, and rain, a lot like Finland. And the other attribute that people associate with Scots is that they're very careful with their money. And that's something that I think was important when Frank van Jensen hired me.
That's a very good attribute. I think, if my memory serves me well, that this was the best quarter in Nordea's history. So could you walk us through the first quarter numbers and what were the main highlights?
Yes, that's right. We're very pleased to report a return on equity of 17.1% in the quarter, which is an all-time high for Nordea. It's off the back of a continued focus on our customers. We have seen good income growth. We've seen good cost control, and overall just very pleased to be able to perform so strongly. It's a more difficult market, I think. We see that in things are much more flat from a mortgage perspective. Customers are not buying properties and upgrading in the way they used to, so a slower mortgage market. But we've seen good growth in corporate lending, and our corporate customers continue to turn to us for help in the current climate.
Did you see any effect? We had a small banking crisis, especially in the US, and something also happened in Europe. So did you see any effect from that in March?
No impact on Nordea at all. And I think what we've seen over the last couple of months in banking, in banks in other countries, is just a reminder of how important it is to be stable and strong and consistent. And I think that's an absolute feature of the Nordea story. We're conservative, we're very focused on running a safe and sound business, and that's important for our customers, but also for the banking system in the Nordic countries in general.
Could you give us some comments about your loan loss development? I tried to find the loan losses in your report, but they were so small that I couldn't see them with my magnifier.
I think that's right, and it's one of the strange or unexpected circumstances we have at the moment. We know that with higher interest rates, with higher inflation, that makes life a little bit tougher for our customers. The strain on household budgets and the reduction in consumer confidence, we might expect to feed through into lower loan loss, to higher loan losses. What I think we see is, first of all, our customers are in good shape. They've managed their finances prudently. They are still we have good employment rates in all of the Nordic countries, and that helps customers deal with tougher conditions. And so what we're seeing at the moment is, first of all, no signs of stress in our loan portfolios, despite the worsening macro conditions. And that's why we haven't seen loan losses, and loan losses have been lower than historical average over the last 3 years, really.
Have you felt any competition in deposits or pressure to raise deposit rates?
So competition has always been strong in Nordic banking. And as we see interest rate rises across the 4 Nordic countries, that feeds through into customer expectations. And I think we have now a situation with very attractive rates on our savings products that customers are taking up with enthusiasm. And in some respects, it's a choice that customers are making, whether they wish to invest in funds, mutual funds, or those market-based products, or take some of our attractive deposits. And we're certainly seeing customers going into that space.
How do you view the eroding price development in the Swedish commercial real estate market?
So I think there's been a lot of focus on commercial real estate in general, in the US, across the rest of Europe, and then in particular in Sweden. And that's because we've seen such strong growth in commercial real estate activity over the last few years that has then been challenged by what we've seen in the macroeconomic environment, interest rates going up, and indeed the lack of financing available in the bond markets. So it's definitely a pause for thought in commercial real estate in Sweden. Nordea has a very well-constructed real estate portfolio. We have a low concentration across the group, but also in Sweden. And we're also very well diversified in different types of customers and properties. So we're not seeing any issues or concerns at this stage, but I think it is definitely an important issue to concentrate on for the industry.
Okay. I guess you must also participate in refinancing these loans in future years. So are you willing to take more risk in this sector?
So we have space for good customers. And I think that's different from what some of our peers have said in terms of their further appetite for real estate. But where we have good customers with good propositions, we have space to support them at the right price.
Okay. Nordea's profitability turnaround has been quite impressive in the last few years. What have been the main drivers behind this turnaround? Of course, interest rates have helped somewhat, but what are the main drivers?
So I think that our performance improvement has been sustained over the last 3 or 4 years. So before we started to see some of the benefits from higher interest rates. And I would attribute that to 2 things principally. The first is a real focus on customer. And that shows through in the delivery of growth in our lending, growth in our deposits, and generally speaking, strong customer satisfaction figures. And I think that's at the root of this. And then secondly, I would say we've had focus and accountability throughout our management team. And I think that sense of purpose and that clarity around setting targets and delivering on those targets has contributed to this.
Nordea's return on equity target is that it should exceed 13% in 2025, but as everyone knows, I think your return on equity was now well over 17% in the first quarter, so you're already exceeding this target. You have said that if the market situation stabilizes later this year, you would update this target, but could you give us any hint where could it be, or does it need to support this sort of return on equity? Do you need high interest rates or what?
So we've been pretty clear from when we announced the return on equity target of above 13% in 2025, that of course above 13% means there is no ceiling on it. We've had a really strong performance over the last few quarters, and as we talked about, a record return on equity at 17.1% this quarter. I think that needs to be seen in the context, though, that we have a number of things that support that high level. First of all, as we talked about earlier, we've seen extremely low loan losses, and we know that in a normal environment we would expect to see the normal level of loan losses, and we've talked around 10 basis points, which is compared to the 2 basis points that we saw in this quarter. And I would expect also to see in a slowing economy the impact of competition coming through, and I suspect that that will put some pressure on our margins and other things. We will still return a strong profitability, and we will absolutely meet our targets. And so I think we will give an update to the markets at the end of this year, when I think we will have better clarity on how our customers and how our economies in the Nordic countries are faring and how they're getting through the current turmoil, and better line of sight as to what things might look like in 2025. So that's a good time to update the target.
We're looking forward to it. 2 follow-up questions. You mentioned that you assume a loan loss ratio of 10 basis points. I think that's well below the historical average of Nordea. I think it's been over 15 or maybe 20 basis points, something like that. So why should it stay that low compared to your historical levels?
So that's a good question, Valerie. Our historical average has been around 15 basis points. But we have a very different shape in our business now. We're entirely Nordic focused. And so in the past, we've had businesses elsewhere in Europe where we've seen higher levels of loan losses. Poland is an example, Russia. We're no longer in those countries. We're completely focused on Nordics. And we have a different shape to our lending portfolio as well. We're now much more tilted towards mortgage lending, which has a very low level of losses historically, and that's a much more important part of our portfolio than in the past. And then we've also taken a step back from some of the more volatile, higher risk sectors, and one of those would include oil and offshore. And we are now very much reduced in that space. So all of those things have changed the mix in our business, which means we're a lower risk, lower loan loss bank going forward.
Exactly. And the last question, in your presentation slides, you have slides when you show your interest rate sensitivity. When interest rates goes up, then that's very pleasant to know that, of course. But I think market expectations are that they will start go lower maybe later this year or 24 or something like that. So how sensitive you are in a situation where interest rates actually go down?
So I think there's been a real benefit to all banks' net interest income from finally getting back to a more balanced interest rate policy. I don't think that zero or negative interest rate policy has been a good experiment. So I think we're getting towards a more normalized environment. Certainly expectations are that rates will remain positive but lower in 24 and 25. And I think that's helpful for customers. So that will inevitably slow the rate of expansion of net interest income. But I think it's really important to have positive rates to remind people that money has a cost.
Thanks, Ian, for the interview.
Pleasure.